Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Conor Coughlin, Chief Commercial Officer at Apex Fintech Solutions, to discuss how Apex customers traded Silicon Valley Bank in the First Republic fallout. It is great to have you with us. Conor, remind us who Apex Fintech Solutions are and the kind of data that you're accumulating from your customers.
Yep, so great to be back. Apex Fintech Solutions is a B2B API-based custody and clearing platform. We support about 20 million retail brokerage accounts around the world, and our mission is frictionless investing for all. So we love when there's big financial events or any sort of market event to look at what retail investors are doing in real time.
Well, let's talk about that. How did they respond to Silicon Valley Bank and First Republic, that fallout from March 10th to March 13th?
Yep, so we looked at some data from last Thursday versus our average through earlier in this quarter. And what's super interesting to us is that both First Republic and Silicon Valley Bank together saw less than 200 trades total daily on our platform. Last Thursday, we saw those two names together go to almost 50,000 trades in a single day, with about 1.5 times more buys than sells. So we definitely saw that retail investor trying to buy the dip, which unfortunately didn't work out great with Silicon Valley, but as we'll get into, that trend's continued.
So what are the broader implications?
So after looking at that data, we decided to put two peer groups together. One focused on regional financial institutions, the other one focused on more established national financial institutions. What we saw in those regional financial institutions is that trading went up over 1,000% over the last couple of days in those names that have all been hot topics for the last couple of days and over the weekend. And we saw the buy to sell ratio there at almost 2.5 times more buys than sells. As far as the national, more established financial institutions go, again, it wasn't quite as big of a jump, but we saw a 250% increase in the number of trades overall with a 2-to-1 buy-to-sell ratio. So what we're seeing here is that retail investors are putting faith in what the government's doing to stabilize the system and seeing an opportunity to buy the dip. I can't say that's for every retail investor on our platform. We did see a 500% increase in the notional value of oil and gold instruments traded. So there's definitely a strong contingent of people looking for safety amongst all this.
So it sounds like they took a different approach with a name like Schwab as an example.
Correct, yep. With Schwab, actually, we didn't want to skew the data just given how big the news was around them. So we looked at Schwab separately, and we saw about 1,000% increase in trading activity, again with a 2-to-1 buying ratio. So a lot of people believing in Schwab, seeing an opportunity to buy the dip.
What did the overall Apex retail market trends look like for the same period?
Yep, and obviously the market was tumultuous, which is going to raise activity, but we only saw about a 12% increase in volume for Apex. And as is pretty standard, it was about a 1-to-1 buy-to-sell ratio across all other names that we had looked at. So definitely a lot of concentration into those hot banking names and people seeing an opportunity there.
Yeah, it's so interesting. You and I were talking off camera that when you get these big volatile events, all of a sudden people get interested in custody, right? So explain to us why custody is so important to the ecosystem.
Custody of stocks and different tradable instruments is so important, same as custody of cash in the bank, is people want to make sure that when they go to sell their shares, when they go to take their cash out of their brokerage account, that it's going to be there, that they could trust the custodian behind their introducing broker. As I said, we have 20 million accounts globally. Most people don't know our name. And it's really important to know that whatever app you're using or advisor that you work with, you should know who your custodian is and make sure it's a safe place to keep your funds.
All right, Conor, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.